Hello there, welcome to my channel. In this video, we are going to continue our discussion on financial modeling and business valuation. And you will remember that in my previous 3 videos, we started a journey on this particular video, and we've looked at an introduction to the entire video or series. We looked at how to project some of the line items within the income statement. We also looked at the cash flow statement in our last video. And so in this particular video, we are going to look at how to project some of the balance sheet items as well. So welcome to this particular channel. If you are a new viewer, please subscribe to the channel and also consider liking the video and sharing it with others so they can also benefit from what you are going to learn in this particular video. I promise you this is going to be very interesting, so you can count on that. Now we are considering Amazon financial statements as our use case. We are going to look at the balance sheet in this particular video, as I said. So just as we did for our cash flow statements, let's do a bit of formatting here. So let's head back to our cash flow statement and copy the formatting we did at the top here for our year rows. Copy this. So selecting everything here, I'll copy that using Ctrl C. Come here and paste it using Ctrl V. Alright, so just like that, we are able to replicate that. Alright, and then also I'm going to resize some of these items. So what I'm going to do is to select the entire area here where we are going to input our figures. I'll select the entire area and I'll head to my numbering section here under the home tab, and then I'm going to change it to number, not accounting, number, input my comma separator, and then reduce my number of decimals to 0. Alright, so that is what I want there. And then selecting all the columns, the 3 historical columns here, I can reduce them simultaneously. Alright, so this is better. So I can have an entire view of all the columns here. Alright, so that's good. So let's also look at our numbers and then look at the totals and do the necessary formatting as we did with the other 2 financial statements. So we have our assets, and the assets of Amazon comprises current assets, and the current assets comprise cash and cash equivalents, which we usually pick from the cash flow statement. We are going to get to that. And then we also have marketing securities, inventories, accounts receivables. All right. So we have total current assets. So the total current asset is equal to the summation of all of these items. So I'll hit Alt equals to sum that, and then I can copy my formula to the right using Ctrl R. All right, and then I'm going to select the entire row here and bolden it, and then also insert some borders. We have not been making use of the borders often, so let's make use of our borders here. All right, so that is nice. And then what I'm going to do whilst I'm scrolling down, the years under which we are working seems to be disappearing. So what we have to do is to freeze the panes, and to freeze the panes, we come to, I'll select the assets here, as you can see, come to my view tab, and then under the window section here, you see freeze panes. So I'll click the drop down here, click on the first one, freeze panes, and then the panes are now free. So when I'm scrolling down, this is static, and so I can see the years under which I am working. Alright, so that's just by the way. Now the second category of assets is what we call the non-current assets. Alright, so and they comprises property, plant and equipment, operating leases, goodwill, other assets. Now some companies may decide to bring these non-current assets before the current asset. The presentation doesn't matter. What matters most is you understanding what the various items are. Alright, so these are our non-current assets. So we are going to do that, and then the addition of all of these items together with the total current assets is what is giving us this total asset here. And so the total asset figure is going to include, so I'm going to select the first line item, which is other assets here. Holding my shift, I can use the top arrow to select all the other items, including our total current assets, and hit enter. And then I can copy this formula to the right using Control R. And then also I'm going to select the entire row here, bolding that using Control B, and also insert my border. Now I'm going to teach you how to be using the shortcut, the keyboard shortcut keys. And so to use the shortcut key on the keyboard, you can hit Alt. When you hit Alt, you see all the various tabs or sections on your Excel having alphabets and numerals. All right, so you just use the alphabet and the numerals to be able to do that. Now I want us to go to the home page, and the home page is designated using the alphabet H. So I'll hit H. When you hit H, it's going to highlight all the various sections on the home tab. All right, so I want to insert border, and border is designated by the letter B. So I'll hit B, and then when you come to B, all the borders have been designated with alphabets as well. And so I want to insert top and then double bottom border, as you can see here, and that is designated by the letter U. So I'll hit U, and that is going to insert that for me very nicely. All right, so that is that. So then that's the first aspect of our balance sheet. After that, we will look at the general section of the balance sheet, so don't worry. Let's do the editing first. Then we also have total current liabilities here. I'm going to sum that. So Alt equals, which is the auto sum shortcut, and then I can copy the formula to the right using Control R, and also select the entire row and bolding that using Control B, and also insert a top border. And so Alt H B O. All right, that is going to insert a top border. Sorry, so that is actually a mistake there. So let me undo and redo that. So Alt H B, which is border, and then the top border is P. All right, so that is that. And then we have the long-term liabilities as well there, and we also have our stockholders equity, which I'm going to bold in there, and these are the compositions of our stockholders equity. Then we have total stockholders equity, and that is going to be Alt equals here to sum everything there. Good, so my formula is working correctly. I'll hit enter and copy the formula to the right using Control R, and also bolding this using Control B, and hit Alt. So I'm going to select everything here, insert my border. So Alt H B and top border. And so I'm going to pick P. Sorry. So we have Alt H B and P. All right. Then we'll have our total liabilities and stockholders equity, and that is going to be the total of that's going to be the sum of our total current liabilities added to all of these and added to this one, the total stockholders equity. So to be able to make that easier, what I'm going to do is to sum our total long-term liabilities as well. It seems Amazon didn't do that, so let's insert another line here and name it total long-term liabilities. All right, and then I'm going to have equals and sum that and copy the formula to the right using Control R, and also bolding the entire area here using Control B. Come to Alt H B P to insert my top border there, and I can have the total now, which is going to be equal to my total current liabilities plus my total long-term liabilities plus my total stockholders equity, and hit enter, and that is giving me this total. I can copy the formula to the right using Control R, and also select the entire area here, bolding it using Control B, or you can also use the shortcut once again for the bolding. You can use Control B, or you can also use Alt H1 to bolden it, and then also I'm going to use H B and U to do the top and then the bottom double border, as you can see there. All right, so that is the quick editing you want to do. All right, now let's look at the individual composition of the balance sheet of Amazon, and then we can see how we are going to or let's understand the individual items or some of the most important ones, and then we can move from there. All right, so the first one we looked at is cash and cash equivalents, which we have dealt with in our cash flow statements. All right, then we have marketable securities. All right, so marketable securities are also there. We have inventories, we have accounts receivables and net other or net and other. Then we have property, plants and equipment. We have operating leases, goodwill. Now, goodwill is, as it were, is found in every consolidated financial statement, and it is the value of or is the amount or the purchase consideration paid in excess of the real value of a particular business we purchased. All right, so if a business is worth $10,000, all right, and you end up paying $12,000, the difference between these two figures, which is 2,000, is what we are calling goodwill. So it is the excess payments we make to acquire a business. All right, so that is goodwill. If you want to understand goodwill, you can watch my consolidated financial statement videos and to understand goodwill better. We also have these operating leases here. Okay, so what Amazon does is that it categorizes its leases with contractual terms longer than 12 months as either operating or finance leases. All right, and the finance leases are those that allow us to substantially utilize or pay for the entire assets over its lease term. Assets acquired under finance leases are recorded in PPE for Amazon. All other leases are categorized as operating leases. So this it means that in the financial statement of Amazon, it has finance leases, but those finance leases are classified as property, plants, and equipment, or PP&E, whilst all the other leases are classified as operating leases. All right, so take note of that. Now, a quick search on these leases says that they have lease terms ranging from 1 to 10 years for equipment and 1 to 20 years for property. All right, so take note of that as well. All right, then we also have other assets here. Now, other assets usually, as the name goes, is vague, and so we need to do a bit of digging to understand the composition of these other assets. And my research shows that the other assets consist of video and music content, acquired intangible assets, all nets of accumulated amortization, certain equity investments, equity warrant assets, long-term deferred taxes, assets, and lease repayments made prior to lease commencement. So you see that the other assets comprise a whole lot of items. And when it happens like that, projecting becomes very difficult, but we are going to get our way around it. So don't worry. So that's the composition of the other assets we are seeing here. All right. Then we come to liabilities and stockholders' equity. So with the liabilities, we are talking about current liabilities, and these current liabilities comprises accounts payable, accrued expenses, and we have accrued expenses and other, and then we also have an earned revenue. All right, so those are the compositions of our current liabilities. And then we have our long-term liabilities, we comprise long-term lease liabilities. We have long-term debts, and then we also have other long-term liabilities. So once again, we have other long-term liabilities. So let's see what the composition of this line item is. So once again, this is a combination of several liabilities. And a note from the 10K shows that it includes liabilities primarily relating to financing obligations, asset retirement obligations, deferred tax liabilities, and earned revenue, tax contingencies, and digital video and music content. So those are the compositions of these other long-term liabilities item you are seeing here. Again, it is very difficult to predict the value for such an item, and so we are going to find our way around it. So that is that for our so this is supposed to be, so that is that for our long-term liabilities. All right, then we have stockholders equity. We have preferred stock, which is empty here, so quickly we can delete that out um from the balance sheet because it is empty for the entire 3 years. And so what we're going to do is we are going to delete that, and I'm going to use the shortcut key once again. So Alt H D and D to delete that. All right, then the second one, so now we have common stock, and it has a par value of $0.01, and these are the values we can see here. Then it also has treasury stock at cost, additional paid-in capital, accumulated other comprehensive income, retained earnings. Now we want to do a bit of merging here. Now, when it comes to financial modeling, we usually add additional paid-in capital to common stock. All right. So what we can do here is to have common stock and additional paid-in capital. An additional paid-in capital. Now, there is a reason we do this, and I'm going to show you in a moment. So, what do we have to do? We are going to have this plus this amount here. So, I'll have my equals plus this amount, enter, and then I can copy my formula to the right using Control R. And so let's check the formula and see if it is working properly. Let me undo this. All right, so our formula is working properly. And what I want to do is to select this, copy it, paste it here as values. So Control Alt V and V again, that is values, and then enter. That's going to paste it as values there. And then I'm going to delete this, hit delete on the keyboard, and also delete this entire row here. Come here, copy this, and I can paste it here. All right, so that is what we have, and then I can delete this one here. Right. So that is what we have in there. Now, the reason or the reasoning behind combining common stock and additional capital is this. The par value, which is 0.01 in this case, of our common stock is some base value the shares are initially worth, and this value is quite nominal. All right, as you can see, 0.01. Once these shares are issued in the market, the price issued less this par value is the capital in excess of par value, or what we call additional paid-in capital. So for instance, let's do some worked example here. For instance, let's say that you want to raise shares, 100 shares, all right, in the stock market. If we issue these shares at $20, so the issue price is $20. Let me insert my dollar sign there. So this is being issued at $20. Of the shares is going to be equal to this 100 times 20. All right. Now, if the shares have a par value of, let's say the par value of these shares is $0.1. So I'm going to put my dollar sign there, $0.1. Then it means that the shares at par value is going to be equal to the number of shares issued multiplied by the par value, which is 10. And so there's going to be a difference of the amount at which we issued our shares in the market and the par value of the shares, which is going to be 1,990. This 1,990 is what we are calling paid in capital. So as you can see, the paid in capital and the value of our shares are very related. And that is why for financial modeling purposes, we tend to add these two together. All right, so that is just by the way. All right, so that is what I want us to look at there. We have treasury stock, and we also have accumulated other comprehensive income and all that, retained earnings. All right, so that is what I want us to briefly look at when it comes to the balance sheet. Now, what you must note is that majority of the things we are going to do on the balance sheet, the projections, the forecasting, or the modeling we are going to do on this particular financial statements are going to come from other financial statements such as the cash flow statements and our supporting schedules. So what we are going to do is we are going to leave it here, and then in our next video we are going to look at our supporting schedules, particularly the PPE schedule. We will build our PPE schedule, also build the working capital schedule, and come back to the balance sheet to do what is needed. All right, so stay tuned to the channel. Don't forget to subscribe to the channel, and also consider liking the video, and also hit the notification button so that whenever I release the new video, you'll be able to receive it and watch it. All right, so thank you very much for your attention. I will see you in the next video.